On YouTube, it is your boy Ray Bans, and I am back with another video. And today we're going to be talking about the surefire strategy. Now, if you're watching this video, it's probably at the end of my Pocket Options free course. And this is my gift to you. I'm going to go back and break down the surefire strategy for you today so you can use it. Now, I have made some tweaks, right? I made it extremely simple. This is literally 1, 2, 3 indicators on the chart, okay? Including the Hakanashi candles, if you want to count those as an indicator, which they are, right? So we can say 4 indicators on our chart. And I'm going to show you how you can actually break down this strategy so you can find yourself understanding what you're looking at, okay? So the first thing that I want to start with is the setup of the strategy. The first thing that you're going to add to your chart is going to be the Bollinger Bands. Now, if this is your first time checking out Pocket Options and you're just looking into strategies and you don't know how to get to your indicator settings, I do have a video called Everything You Need to Know About the Pocket Options Broker that you can watch that goes over everything with the broker, but it's going to be this button right here, okay? It looks like a music dial. If you click this, it's going to bring up all the indicators that you have access to. Now, after you click that, you're going to click the Bollinger Bands, right, which will be right here on the left-hand side, closer to the bottom. And it'll pretty much pop up some Bollinger Bands on your chart. I'm actually going to click it just so you can see what it pop up as, right? It'll look like that when you first add it. But when you go into the settings and change the settings, it'll look like what's on my screen. I'm going to click into the settings right here, right? If you see this little arrow, see? I'm going to click into that, and then where it says Bollinger Bands, we're going to go ahead and hit this little pen icon, and we want to change the period to 20, and we want to change the deviation to 2. We're going to go to style, and we're going to make that top red. We're going to make the middle white, and we're going to change the pixel count to 2. So if you click into that, that's how you'll be able to change that. And then we're going to make the bottom blue, and then we're going to uncheck the background, right? That just looks kind of nasty, so we don't want that checked. If you want to leave it on, you can, but to me it's just too much, so I take it off. And then we're going to hit save. We're going to go back to our indicators list, and we're going to add our moving average, which is going to be in the middle at the bottom. When we click the moving average, then we're going to go over to where we can edit, click the pen, and then right here where it says period 14 moving average EMA. All right, and then the style, we're going to make it 2 pixels, and we want it to be gold, yellow, whatever your eyes see. We're going to hit save. The last indicator that we're actually going to add is called the Williams %R. Okay, we're going to go to our indicators. We're going to find the Williams %R on the right-hand side, closer to the bottom. All right, and once we click that, it's going to be at the bottom of your screen, and you're going to go ahead and click the pen tool. We're going to put 14, and we're going to go to the style and make the main line white, 2 pixels, and then the -20 red, 2 pixels, and the -80 blue in 2 pixels. Now, once we have all of those settings on our chart, the surefire strategy is in effect. Now, if you've been watching some of my previous surefire videos, I usually have 2 Bollinger Bands. The reason why I took away a Bollinger Band is simply for this. It's a lot of people who are trading who have very tiny screens, and they're like, man, if I add all these indicators, I can't see anything. So I was like, you know what? Let me just keep the most effective indicators on the chart, and I'm going to teach people how to read those indicators so they can still get the full value of the surefire strategy. Also, if you watch some of my older YouTube videos for the surefire strategy, I go through so many indicators that you can add at the bottom, so many ways that you can look at the strategy, so many entry times that you can use, but I'm not doing that on this video, okay? The first thing that I want to talk about is what I added. I added the 14 moving average because it's a great moving average to reference, okay? It's not as fast as an 8 moving average, but it's not as slow as a 21. Now, the white line that you see in the middle of the Bollinger Band is a 20 simple moving average, very similar to a 21 moving average. However, if we add the 21 moving average to this chart, we would add it as an exponential. That's a preference that you can use if you want to, but the simple moving average is just fine. You really don't have to worry about it too much, okay? Now, the 14 moving average is the most important line on the chart right now. I'm going to show you why. Lastly, with the setups, okay? I know in most of my videos, I take trades. I show you guys where you should be entering, and I take trades if I see trades. But because I have so many videos where I've taken trades and I've explained what you should be looking at, I really want you guys to not be codependent on what I teach. I'm noticing that you're probably, or a lot of people do this from what they tell me when they talk to me in person. They watch a lot of videos, they're referencing these traders, they're seeing traders enter trades a certain way, and then when they hop in their live account, it's not the same thing. I want to encourage you to take what I teach you and then to go practice it, not just in your demo. I don't want you getting in your demo practicing to win trades. I want you to get in your demo practicing to understand what you see, practicing to be the best. What's the point of winning trades if you don't know why you won them? What's the point of losing trades and you don't know why you lost them? You know, I actually get upset when I win a trade this close because I know what a successful trade looks like. Most of my trades push away just like this. I'll enter, it pushes away and never comes back. So when that doesn't happen, I feel like I missed something, or I entered a little too early, or I entered a little too late. And I want to refine that, because if it's up to me, every single time I enter a trade, if I wait for what I know I like to see, I should get that result most of the time. Okay. So let's break this down. The first thing that I really want you to pay attention to is structure. That is the number one thing that you can trade with. I'm looking at Boeing, and of course I can go back in the past and I can break things down, and we'll come back to the current market so I can show you how you can market in real time and what you should be looking for. Okay, so I'm going to go back in the past and I'm just going to show you some very popular things that you actually can look for when you're using this strategy. Let's actually start right here with the sideways market. The first thing we want to identify is the market trending or is it going sideways? There's two ways you can see that. And this area is great because it has two. We have a nice little trending area right here. And we know that this is trending because what? It's actually respecting our 14 moving average. And it is not breaking past our 20 simple moving average. Now, when it's sideways, look at this. You see how many times it's actually going through both and it's cycling through both. Now, you might think, well, the sideways market can be tricky too, Ray, because we don't know when it's actually going to reverse. And it's going to be a term that I'm going to teach you called touch points. I've made videos about it. I've talked about it multiple times, but today I'm really going to show you how to apply it with the surefire strategy. So let's focus on the trending market. If you've been reading blogs or been trying to learn how to trade, you'll hear a lot of people say, you know, the trending market is your best friend, which is true. OK, so first, we do have a squeeze up here. A squeeze is when the Bollinger Bands get really close. That's pretty much showing you like, hey, it's not a lot of volatility in this area. And, you know, pretty much you should be watching for a breakout. And usually when price breaks out, it breaks out. It actually moves. So right here, you can see we have a squeeze. Let's mark that squeeze because I really want you to be paying attention to this. We're going to get two different trend lines and I'm going to show you. All right. We have price not passing this point. We're just going to make that red in 3. And then we have price not passing this point. Now, a lot of people are not patient enough to just wait for opportunities like this. You know, this right here is collecting orders. That's what this is. If you can wait for this opportunity, your win percentage is going to be extremely high. However, you know, it's pretty hard waiting on that. I'm going to make that red, turn this to 3. Okay. Now that we have that set up, what I'm paying attention to is, hey, what's being respected? It comes out of this squeeze and it starts to respect my 14 moving average. Now, you're not always going to have a squeeze, guys. Sometimes you'll have structure. Sometimes you'll have the market going sideways in all type of funky ways before it wants to make a nice, you know, big move like this. It's not always going to be like this. I'm just breaking down what I see right here. I have a squeeze. And then I start to see that my 14 moving average is being respected. Now, let's say that you want to catch a trade and you see that price pulls out of this area. The safest place to enter is either on your 14 moving average or after it rejects the 14 moving average. This is after you confirm that it breaks out of an area. So you see how it's in this area, which this is called a price trap. It breaks out of the price trap. It comes back. Not only is the 14 in the area where the price trap is at, it rejects the 14. So as soon as it gets back to that area, you can take a trade down, or you can say, you know what, I want more confirmation, which is what I would do. and the next candle actually tries to go up and closes even stronger away from the zone. That is enough confirmation for me to be confident enough to place a 4-minute trade. Not a 2, not a 1, not a 3, a 4. Now, you might have already have trading experience and you might feel like, you know what, Ray, 4 minutes is a long time. Let me put something into perspective for you. 2 minutes is extremely fast. 4 minutes is extremely fast. In traditional Forex, you would have to enter the trade right here and you would have to ride this out. Ride this out until you feel like, okay, it is exhausted. It has come to a point of resistance that is strong. It has come to my profit target. I caught all of these pips to make profit, which would take, this looks like a 30-minute move. Somewhere around there. I'm not going to count it, 30, 20, whatever. So you have a 30-minute move right here. It would have took you to catch however many pips for whatever amount of money that you were willing to risk. But because we're in high frequency, you can literally make what you want to risk. So if you have a $10,000 account and you want to risk $500 for 4 minutes, that is a lot of money in 4 minutes. The shorter the time frame, you're more acceptable to some BS, all right? Now, of course, if you're in a 4-minute trade, sometimes you can get spiked out of those trades too. But the 2-minute trade is more elite because if you enter at the wrong time, I promise you, you don't even have a chance for price to try to come back and help you. Does that make sense? Let me give you an example. Let's say that I entered right here. Look at this. Let's say that I entered right here, right? I entered for 4 minutes. We're going to use this as I entered for a buy, and we're just going to make that 5 so we can see it. So I entered right here for 4 minutes. 1 minute, 2 minute, 3 minute, 4 minute. You see how price came back? If I was looking for a reversal. Now, if I would have ended for just 2 minutes, I was going for a buy for just 2 minutes, I lost. I lost, right? Or potentially got spiked in. What I want you guys to understand is that when you're catching a key area, when you're trading in key areas, the time is meant to give price enough time to push away. So as long as you're not trading in a tight area like this, right? And you're trading in an area that has enough space between structure. What do I mean by that? I'm going to go get a box and show you. Look at this right here. You see how price was kind of struggling in this area. And then if I look to the left, oh, look, this is an area of structure. That makes a lot of sense. So this is where price pushed off. So because it went up here, it went into a price trap. It decided to reverse, right? It gave me some good confirmation that I can take that trade down. What is the next area that traders would typically be looking to get out of the trade and traders would be looking to get into the trade? That is always going to come from an area of interest. And areas of interest is where price action happens. Because we're looking at Heikin-Ashi candles, the one thing that we're looking for is like this. We want to see some type of change in direction. We also want to see wicks, right? Wicks at the bottom of candles in certain areas. Look, this is an important area, guys. As you can see, price struggled right here. It broke above. Then look what happens. It comes back down. Look at the area. Do you see it? I'm going to get a line. I'm going to draw my screen. Look, it struggled right here at first. And then price came back down to the same area. You see it? Before it decides to make a decision. That's how price likes to move. That is exactly how price likes to move. So because it's in this area and it pushes away, it does the same thing right here. It comes past this area. It did it quicker right here because a decision has been made. It pops up, rejects the 14, closes up. That would have been a great signal, just like over here, the same type of signal. That would have been a great signal to enter the market. I do not want you guys looking at this chart and saying that I'm confused. Okay. Matter of fact, when I was telling you to set up your chart, I totally forgot to tell you to select Heikin-Ashi candles. So if you made it this far in the video, because some people don't even make it this far, which behooves me, right? If you made it this far in the video, I want you to go up here to the candle setting and I want you to select Heikin-Ashi. Let me show you something. If your candles look like this, your candles are not right. Okay. These are not the candles that I want you looking at. These candles are valuable, but I don't want you looking at this. I want to keep it very simple. I want you to be able to see momentum and strength. I want you to switch to Hakanashi. It should look like this. Okay. Let's go back to this area that we were looking at. So right here, we have the push off. We understand why we entered the trade right here. And then our area of interest that I just explained to you would be where you see the red box. So when you enter that 4-minute trade, it's like you're scalping. Now, here's another thing. A lot of people are like, oh, Ray, well, is this strategy still good for traditional Forex? Traditional Forex and high frequency are the same thing. The only thing that's different about high frequency is you have time expiration against you, which in reality, if you get good at high frequency, your FRX game should be cold. Your entry should be on point, right? So when you are able to enter on point like that, you need to have areas identified to make sure that the time frame that you're in is enough time. If I'm entering a 4-minute trade and I'm in something like this, that's bad news. We don't know where price is going to be. It's like we're gambling. In this area, you're more of like a 30-second, like you're in the trade for 30 seconds, 1 minute max, like when you're in a squeeze like this, because each candle is changing direction. And you can tell that by how many times the color changes. And if you want to trade this, that's just up to you. Me, I don't have the confidence to do that. Doesn't make sense. However, I will give you a secret tip. I'm not giving you this tip because I want you to do it, and it's something that you should always do. But the more you trade, the more you can actually see opportunities when most people don't see opportunities. When I see a market look like this on the 1-minute chart, when I see this, I'm actually going to put a yellow box around this so we can find it. You can always drop down to a 15-second and be able to see a nice, beautiful sideways market. I'm going to show you how. Watch this. 15 seconds. And we're just going to go back in the past for a little bit. Now watch how long I have to go back just because it's 15 seconds. Like you don't realize how the charts actually can dramatically change just because of the time difference. Here, we almost get into that area. I think, do I still have auto scroll on? Oh no, why do they want to do that? Okay, look at this right here. You see how we have a sideways market? Now, if we were looking at this chart, we would know, okay, I have about a minute to enter. I know I'm in a sideways market, so I can trade accordingly. Looks totally different, but look how beautiful that is. This is actually a situation that I talk about in a lot of videos. We have a sideways market, breaks out, comes up and retests, and then takes off in a trend movement. And also notice when it's trending, what is it doing? It is respecting that 14 moving average. This can work for any time frame. Okay, so if you just really want to do 2-minute trades, then you probably should be looking at a 15-second chart. Also, if you're going to look at a lower time frame, you have to understand that the noise is going to be greater. You probably can find a lot of this when on a higher time chart. This will probably be a little bit more smooth because it's taking more of this information into account for long term. The shorter term chart is going to show you shorter term type movements. So the lower you go in time, the more noise that you see. However, the lower you go in time, the more opportunities that you have. I'm going to let you hash that out and figure it out on your own. Okay, so look at this on the 1 minute. Let's go back over here. We see this, we get our 4-minute entry, big clears. It comes back up to our 14 moving average. It respects. It comes back up to our 14 moving average again, and it respects. I have a rule, okay? This is a 14 moving average rule that will qualify me to put a trend line in a particular area. Because this price respected the 14 moving average twice, I can draw a trend line on my 14 moving average and wait to, like pretty much see how long is price going to respect this trend line before it breaks it. So watch this. I want to take a trend line. I have 2 respects at that 14 moving average. And I'm just going to put it right there on that last respect and boom. Let's make it red because it's going down. All right. So I know that this is an important area. Now notice how the trend line is lined up with the 20 moving average. And when you get a good close on that 20 moving average, that's a trend line break and it can pop up. Now, ideally, when I'm trying to do a 14 moving average respect, one thing that I like to look for is I like to look for it to be just like a nice, pretty shape, right? Let me see if I can find one. Like this right here. You see this area right here? If I drew a trend line right here, this just makes a lot of sense. Comes out of this area. Respects that look, respect. That's beautiful. And then when it breaks that trend line, it's certain things that you can look for that could confirm if you actually want to take the reversal trade or not. All right. And I'm actually going to put a blue. I'm going to come back to this area in just a second. All right. But that's how you draw trend lines. And as long as it's respecting a trend line, you'll know that you can actually trade the trend. Remember, the trend line is directly proportionate to the 14 moving average. Now, some people might be like, well, if the 14 moving average is there, then why should I have to draw the trend line? Because you want to see on your chart, you want to see the geometry. You have to see the geometry of the chart. When that trend line is broken, it doesn't mean that price is automatically going to go down. It means, why? Let me show you. Bring up this box. It means that if we want to see structure in that area. So the safer trade is to wait for price to come back. Now, price might not always come back. It might go into a downtrend. That's okay. We can put another trend line. But normally, the way the market likes to move, when a trend line is broken, it'll actually make structure. So you see how it breaks, comes down right here to this area, which is an area of interest. You see this right here, pushes back up. Look at the rejection, gives out, boom, doji, a doji in a beautiful area. That's a 4-minute trade down, nothing but a smack. Nothing but a smack. That's how you break that trade down. That would make me confident to enter the trade. I haven't even entered in the the Williams percent R. Okay, haven't even added that leading indicator in yet. I'm just going based off of structure right now. Okay, so I'm looking at this area. Notice it follows this trend. It gets down to another area. It makes a good reversal. It breaks the trend right here. Now, because I'm looking at this area, I know that this is an important area. Now, if you get a close like this on the trend line and you want to trade that up, I can understand why you would want to take that trend break up to this area. I can totally understand that. And that's an advanced trade. Me personally, that's a trade that it's like, ooh, that's kind of risky. I'm not too comfortable entering that trade. I'm more comfortable entering trades called touch points. What does that mean? Okay, this trade is a touch point. That's a touch point trade. You see how price rejected off of here, then it came back up to the same area and it gave out off the Bollinger Bands and started to change direction. If you watched any of my past videos, I talk about the candlestick pattern with Hakanashi called the Pisces pattern. It's just a pattern that I made up, but it's when you have momentum going one way, flat bottom, and then the next way it's a flat bottom, right? It can have a little bit of a wick on both sides. That's okay, but it's like it's going one way strong and then out of nowhere, it's going the other way strong. If I have enough room between the zones, I'll take that trade in the direction that it started to go. So let me show you where I would place my zone. Because it pushed off right here, you see how it kind of struggled? I will put the zone right there. I'm just going to turn that zone red. And then look at that. Boom, it pushes down about to that area before it comes back, makes structure again, and then completes the task and goes all the way through. This is another thing that I want you to look at. Even though I have a zone right here, notice that this is a touch point area now. This area has been confirmed to be touch point. So I'm going to get a trend line. All right, same area. And I'm just going to draw that across just like that. Look at this. Let's make that a 3. That's a touch point area. So all I'm looking for in my Hakanashi candles is for price to get down to that area and start to give out. Now, you know, with the surefire strategy, the number one thing that we like to trade is what? Dojis. We love the doji. And we get a strong push like this. We have a confirmation that this is a touch point area. Even if we look all the way across and we take that across like, oh, snap, that's an important area. Look at that. That's a super important area. So we have price in this very beautiful area. And then out of nowhere, we get the doji. Now, we can take the entry right here. Let me show you your entry options. Get this trend line. Let's make this like we were taking an entry. Now, you have to understand your zone. I'm going to show you where the entries are, and then I'm going to show you how to look at the chart in zones. Look, let's make this green, and we'll make it 3 so we can, well, let's make it 5. Okay. Can I up the opacity or no? I should be able to up the, okay, it's already kind of up there. Okay. So look, save. If I took an entry right here, 4 minutes, that's a clear. Even though it got right here and it played a little bit, my entry is way down there. Big Joe can't get me. I call that my entry is too elite, right? So you can have an entry right there. You can also have an entry on the 14 moving average. Now, let me tell you why this is acceptable to have an entry on the 14 moving average. Let's make it that size. Let's make it 5. Okay. Now, when I see price come up here and it closes like this, so it pushes, it closes, I don't just automatically enter. Now, sometimes when I don't automatically enter, price will just shoot through, you know, but the reason why I wouldn't automatically enter right here is because do you see this right here in this area? This, I'm gonna put a purple box around it. When I see price kind of slow down in the middle of a movement, that's just kind of like, somebody's right there. You know, somebody's right here. So when I see price coming up there, it's like, you might try to push down and make like a double bottom. So I'm just going to wait just a little bit. Now I'm in a 4-minute trade. So if I took a 4-minute trade right here, 1 minute, 2 minute, 3 minute, 4 minute, that's it. That is a clear. But just out of experience of paying attention to what's happening in the market and watching for areas like this, it would make me hesitate naturally because I've seen it before. You know, when in areas where you have like a little bit of structure, a little bit of playing, right? And it gets to those same areas and it starts to do the same thing. You see right here. Then in the same area, it starts to play a little bit. I'm used to that. So it's like I'm hypersensitive to it. But this gives me more confidence in my trade because now it tries to come back and it dojis and then it closes strong on the EMA. So your entry, that's a good close on the EMA. Now you get 4 minutes of just straight smack. 1, 2, 3, and 4. That's the zones that you should be looking for. So if it's a touch point trade, your zone, and let's make the zones orange. Let's make the zones orange, okay? Boom. And then let's make the border around the zone 3. If you're looking for a touch point trade, then your zone, which means if it's a touch point trade, you're probably trading a reversal. That's what touch point is. It's a reversal trade. So if you're looking for a reversal trade, then your zone is 1. It's going to be when price is slowing down. So you have to be paying attention to the Hakanashi, right? And it's going to be somewhere in this zone, somewhere here. One thing that you actually can look for is when price starts to close above right here. If it starts to close above the last flat bottom, that's a good signal too. That lets you know that momentum is fully changed. So you see how price right here was closing below, closing below, closing below, and then it finally closed above right here. I don't know if you can see that right here. I'm looking at this candle. I'm going to drop a vertical line just to show you. Well, actually, no, I don't even have to do that. I can draw where I'm looking at. You see how, look, close below, close below, close below, and then this one right here closed above. And then look how momentum changed. You see it? That's very small things that you want to pay attention to. Right? Easy to see, easy not to see. The more you trade and the more you study, those are small things that can be signals for you to enter. So on that doji, when you see price giving out, you can say, okay, because this is a touch point, I want to take my entry as close to this line as possible. And if you do that, it rewards you. Now, also, if you wait longer, and let's say that your entry was up here, that just means that you're going to, your clear is going to be closer towards the 14 moving average, because the longer that you wait, you actually will get past both of these candles, which means this candle would have enough time to close, which would be way up here. So either way, the entry is okay. So if you want to wait for that close to be right there, I understand that too. Okay. It just comes with experience how your timing is. I'm gonna just move this back down right there. And then we're gonna move that zone up. All right, let's add our other zone. Let's add our other zone, which is gonna be our orange box. Orange, 3, boom. Our other zone is going to be right there on our 14 moving average. Now, the 20 moving average, I know some people are looking like, man, when that 14 crossed that 20, it's game time. I wouldn't necessarily think like that. You really want to be paying attention to structure because, look, the 14 crossed right here, boom, came under. I'm pretty sure when this market was moving and this popped way up here, that 14 moving average was up. But when you got this close, it fell back down and you just got faked out. So be very careful if you want to trade that 14 moving average cross. Like, you can trade it, but if you're going to trade it, you want to trade it off of a touch point. Well, Ray, why do I want to trade it off of a touch point? Because it increases your probability. Let me explain why. Well, first, before I'm going to explain that, and then I'm going to show you your entry for your trend zones, which you should be able to identify your entry for the trend zone. It's off the 14 moving average just the same way. But you see how this is a touch point right here? You see how price gets to this area, which also, look, This is the same area that we're looking at. That's a touch point trade. And you might say, well, Ray, price went above your zone a little bit. Your zones are subjective to your eye. If I see that price goes a little bit above my zone and then it turns back around in the same area and it starts closing the way I like it to close on a 14 moving average. And then I say, you know what? I'm noticing that it's closing nice. Let me see if I can find where's my next zone of interest for a trader. If I was a trader, my next zone of interest is right here. Is that enough room for me to be able to catch a 4-minute trade? Yes. Yes, yes, yes. Plenty of time. Let me change this to the right color. Okay. Now, some people might say, well, Ray, I noticed that right here. Look, you got like a little dojis right here. This is in the middle of a move, right? This is off the 14 moving average. This is like an 8 moving average. That's not really significant. Like when I'm looking for my respects in certain areas, usually the respects is going to come when price is pretty much close. If you're looking at overall respects, right, you're going to have a whole bunch in the same area. It's a sideways market, but that's still near the 14. Right? Look at this. When it's making structure like this and we see zones that we want to close off of. But notice how when price takes off, when price really takes off and it gains momentum, it will always 100% come from a moving average. Boom. Because the moving average is following price. It always will. So I already know that that's going to be my area of interest almost every time on the chart. Now, it's different if I'm in a sideways market and it's disrespecting that moving average. My area of interest is going to be tainted a little bit. It's going to be off. It's going to be near those Bollinger Band zones. By the way, in a sideways market, the Bollinger Bands will pay you. If in a sideways market, if you just focus on overall movements, right? If you just focus on overall movements, you know how much money you can make. I'm going to get a trend line and I'm going to show you something. I'm going to show you how equilibrium works. Look at this. We got this right here. Look at the length of this move all the way back down to the bottom. I'm going to mark this in, let's just do teal, and I'm going to make it 5. All right. Look at this. Look at the length. Now watch when I go to this side. You see it? That's the same thing. That's the same thing. It's like all of this makes sense. I know a lot of people be making fun in the comments on some of my older videos saying, oh, yeah, the market does move in cycles when I'm not in it and, things like that. But if you're not able to see where your entries are, or you're having a hard time finding what zones you should trade off of, if you just wait for the good overall movements and trade off those zones, you should be fine. But I'm giving you the sauce, guys. I'm showing you how you can break this market down. And it doesn't matter where the market is. You can catch an up trade, a down trade, and you can do it simply by watching that 14 moving average and seeing what type of touch points are happening inside of your Bollinger Bands. And if you notice that your Bollinger Bands are just getting a little bit too tight for your comfort, you can just wait it out. Price trap and wait for price to break. That's a gem. That is a freaking gem. You could take a box like this and say, ooh, I noticed that price is not coming out this area, and I'm just not really interested in trading it until it confirms that it wants to come out this area. So you put your little price trap box. It's bouncing around in this box, and then look at the confirmation that you get right here. You notice that every time you got to the top of this box, fail, right? Fail. And then, not falling. Falls all the way back down to the 14 moving average, and within the same minute comes all the way back up and closes strong. If that's not an entry signal, if you can't see that as an entry signal, then Jesus, help you right now. Look right there. Boom. That is a great entry for a 4-minute trade. Beautiful trade. Smack any trade, really. But I want you to really be focusing on overall movements. Overall movement. And then you see how it goes up to an area of interest right here. That's a smack. Now watch this. That's just some pro tips. I got off on a little rant right there. So look at this right here. You see how when the market is trending, I'm looking for my area of interest. Let's say that it comes up to my 14. Remember, when it's trending, that is a very safe area to place a trade. Now, it's super hard to place a trade in an area like this when you start to see the Heikinai candles actually turning around. One of the most popular areas to place a trade when you're looking for a trend trade is at the bottom. And I say that this is popular because I know a lot of people in my Discord do it. I do it, but I really have to have a lot of confirmation to take this trade. It's actually not my favorite trade at all. I actually like the reversal trade way more than I like the trend trade, just because I like to see what's going to happen in the market. All right. And if I lose that trade, it's like, oh, I was supposed to lose that trade. Look at this right here. Let's do this on 3. And I'm going to show you when the market is doing those cycles. So it pushes down, comes up to the 14, and then it's falling down. The area that most people like to place trades, even myself, is right there, because we want to take that 4-minute trade, because what are we doing? We're trading the trend. You came up to the 14. I expect you to go ahead and push and then come back to the 14. But sometimes, even though the market is trending, it does have areas where it likes to go sideways just for a little bit. So look at this. It comes right here and it kind of plays. And, this is where you get a little frustrated. You like, okay, maybe it's going to reverse. So then you see that it touches right here 3 times. So you wait for price to actually get back to the area and you take a buy, and then it obliterates you because it never broke that 14. This is something that you have to practice in your demo. One, if I'm taking a trend trade, I really like my trades, and I'm even practicing this. I like my trades to be as close to that 14 moving average as possible. Let me explain why this is important. If you've watched any of my Confluence videos, I tell you guys to take the trade between the zones, between the 8 and the 21 moving average. Well, if you think about it, between the 8 and the 21 moving average is what? The 14. So that 14 moving average, when you confirm that it's trending, we know that this is trending. This is a nice little pivot movement. How do we know? Because it collected orders. It came out. Uh-oh, I didn't mean to do that. Let me grab my little green line again. It collected orders. It came out of this area and it pulled back. So your entry should be right there. Let me draw it on the screen so you can see it. Okay. Collected orders right there. Retest right here. And then look, the pullback. This is the pullback. This is your target. And then look, it goes sideways just for a little bit. Another target. Because if you place a 4-minute right here, that's a win. If you caught a 4-minute right here, that's a win. You're trading the trend. So even though you're like, oh, it can possibly go higher. Okay, it respected the 14 right here. It respected the 14 right here. And look, you don't have to immediately take it. Just if you start to see price turn the other way, go ahead and take it. Boom. You got the entry right there, and you caught that right there because you're watching the Hakanashi candle. You see how beautiful that is? That's a nice little trend movement where you could have caught a few trades. All right. So your entry zone for this area, if we're going to go ahead and add our box to that, is going to be right there on the 14 moving average. And this is as you confirm, hey, it is trending on my 1-minute chart and I want to capitalize on it. Boom. That's my entry. All right. Now, if you're entering a trend trade, or if you like, okay, this is trending for a good little moment and you see that it's broken. So let's see right here. Notice that we have 14 respects from this point. It kind of goes below the 14 right here. Respects the 14, kind of plays. You can't predict this. If you hop in a chart right here and you're near the 14 and it kind of plays in their area, you never know when it's going to be like a squeeze and then like, a breakout like that. You just have to be paying attention to the fact that if you see that price is moving in this area, let's say that you were watching right here and you have like a little touch point. So it pushes, it starts to give out. And you're looking like, okay, I'm looking at the overall market and I see that my best area of interest is right here, right? And the reason that's the best area of interest because of all the way across. So I know that this is an important area. This push coming up, I'm looking at this. If it was a live market, I'm looking at this area like, okay, it was struggling right here. So I'm just going to suspect that in this area, it might struggle again. So it pushes up. It comes back down to that 21, doesn't come to the bottom of this Bollinger Band, which I'm like, okay, I'm paying attention to that. It didn't make it to the other side of the Bollinger Band, but it broke my 14. I'm not ready to hop in yet. It pushes up just a little bit higher, but it gave out pretty much in the same area. Comes back to my 21. I'm like, okay, right? Didn't come to my Bollinger Band right here. But I noticed that in this area, it's respected my 20 and it's respecting my 14 a little bit more. So what am I looking for? I really want to see that same shape. None of these candles give me that shape. But it's also in this area where I had a little bit of struggling at. So I would wait through this, which would be kind of hard, but you're waiting for the pullback again. So this literally stays in this area and it finally pulls back. And that's your confirmation right there. Very hard to see in a live market. But if you're thinking the way that I just broke it down, you know what you want to see. What is that, Ray? I missed it. What you're looking for is you're looking for the cycle. That's not a cycle. That is. That makes sense? Look, cycle. That's the cycle, not the small little bitty, closes by each other. Another thing that you want to keep in mind is that, let me change this back to white. Come on now, where my white at? I done lost my white. All right, we're just gonna do yellow. So when you see a whole bunch of closes like this in one area, that automatically means that your Bollinger Bands that were once wide like that, they're gonna go ahead and get closer. And then when price starts to actually move, they'll get wide again. Does that make sense? I hope that makes sense. Let me draw it again. Well, actually look at it right here. Bollinger Bands are wide, and then look what happens when price starts to close. As it closes closer to each other, the bands get small. And then when the bands start to break out, you'll see these fall and then start to follow, and you'll see this expand. And that's what shows you the volatility. The distance between these two bands are showing you how volatile the market is, okay? How much volume you have. All right, and that, I promise you that's an O, not an A. I don't spell volume with an A. All right, let's see. Let's get back over here to our lesson. And I'm almost wrapped up. I definitely want to try to keep this video under an hour. Now, if you made it this far into the video, obviously you're serious about trading. You didn't caught all the gems. I already know that you having epiphanies. You're probably ready to hop on the charts. I need you to go to the comment section, and I just need you to say, Ray, I made it this far, baby. Man, I'm enjoying the gems. I appreciate what you're showing me. Like, it's all making sense. Can't wait to practice. Just let me know that you made it this far in the video, or you made it to the end of the video. And, just keep me posted on that, because that really makes me feel good. That really lets me know that you're serious. I wouldn't be sharing this information if I didn't believe that, individuals who find my channel are not serious about trading. I would just keep it for myself. This is really pretty much me doing all the studying and just showing you all the highlights where you can go and get the study. A lot of people who are learning how to trade just want somebody to trade for them. And then when that person that's trading for them is not that good and they don't know how to trade themselves, they complain and make up all this lame stuff about brokers and how trading doesn't work and all that crap. But this is a channel, you can't do that. You're either going to learn how to trade, or you're just going to, watch other people in my community make money. And that's up to you, which doesn't sound like fun to me. So we have our 14 EMA respect right here. We have our touch points. Right? You see the touch point right here. I seen the overall movement. So when price got back up to that area and I got a good close on my 14 moving average, that could have been a trade that I was taking down. The reason why this touch point I wouldn't have took is because of this. One, if I'm going to take this touch point, I already know that my entry is going to be where, right? I just explained it over here. I'm going to take this entry bar. Well, actually, let's just take this one right here and make it sideways for an entry bar. If you want to enter this trade for 4 minutes, you're really looking at the touch point. It's given out in the same area. Your entry is somewhere in here, right? Under this bar and right there at the 14 moving average. That's your entry. So if I took this zone about somewhere in there, you take that for 4 minutes, smackaroo, baby. You got it all day. All right. Now it'll be pretty close too, though, because that was your entry. So 1, 2, 3, 4. Well, no, you'll close that trade before it starts to come back up. Even if it closed right here, you shouldn't even be in the trade at this candle. All right. But that's how you would have to view it. But the reason why I probably would have missed this trade is because I'm looking at the structure in this area. I'm see where it's coming down at. And I'm like, ooh, I waited too long. I know where my entry zone is, and now I'm 2 candles away. I'm not confident in entering that trade. I'm just going to see what's going to happen. It might go to the bottom of that Bollinger Band and come back up. I don't know what's going to happen, but I'm going to wait. And because I waited, look, it gave out, came back up. But then a few moments later, gave me the same type of entry. Now look at this. That's a pattern right there. That's a pattern. So we got a pattern. That can easily be a zone, but the attractive zone is right here. That's the attractive zone. Got the close. We're watching. Rejects. Oh, yes, sir. What does that mean? Now I get to, because I waited, I get to trade down to the main zone. If I caught an early entry right here, I won that trade for 4 minutes. And then I seen this happening. That's another entry down here off the 14 moving average. And I got 2 trades for 1. So let's say that you're trading 5%. The reason why a lot of trades I wait on is because every single trade is 5%, 5%, 5%. I just made a withdrawal on my account. Like, you know, it feels good to make them $10,000 withdrawals, but it doesn't feel good when you losing them $1,000 trades when you get your account to 20K, right? You get your account to 10K and you taking them $500 trades. 2 losses is $1,000. 3 losses is $1,500. So you're like, man, I really just want to take the most high quality setups. Guys, the information that I'm sharing with you can help you find some of the highest quality setups that you'll find and make it simple. I know that when somebody marks up a chart, you might find yourself being confused and lost, but I promise you, if you identify what type of market that you're in, this is sideways, and then this is trending. If you identify that and then you trade accordingly to what's happening at that 14 moving average, you can find yourself having a lot more clears and understanding what you're doing. Now, let's go ahead and add the final piece to this strategy. Now, I haven't talked about it the whole video because I wanted to show you how you can really get price action-y, like price action serious, understanding the indicators that's on your screen and being able to read these Heikinaishi candles like nothing else. But let's say you want a little bit more support. If you're taking a trend trade and you notice you're in a trend, the market or your indicator for your Williams R percentage is going to look just like it looks at the bottom. It's going to stay at the top more than it's at the bottom, right? You see how it's nothing down there? Nothing. But at the top, all the price is there. And then if you look at your chart, you'll be able to say, oh, well, look at that. It is trending. I get it. All right. So if you're not trending, your indicator is going to be going side. Like you're going to see almost the same amount of touches on each side. So let me mark that up for you. Notice how when it's right here, it's at the top. When it's at the bottom, it's at the bottom, right? And if you're really waiting for structure, notice how this is at the bottom right here and price isn't necessarily at this zone. That's not a trade that you have to take because if you take a 4-minute trade, your entry is probably right there and you got spiked out at the end. That's not fun at all. Okay. So because we're looking at this and we want to take high quality setups and we want to see touch points, this right here is a touch point trade. So you have a touch point confirmed and then you looked on your indicator and oh, look at that. It's actually in my oversold area. I can take that trade for 4 minutes in a key zone because I'm already anticipating it. It's like falling into that zone. I can go ahead and take my trade for 4 minutes and smack it. Right? Easy. Hold on. Let me go back to yellow. Let's see. It comes up here to this area right here. Look at this. It gets to the area right here. And that's that point. And then when it makes the touch point, we got right here. So it falls and comes back. It gives you another point right here. All right. Same thing right there. Two points versus 1. And look how clean that is. Now watch. This is something that I want you to pay attention to. Look how fast it fell and came back right here. But when you wait for the touch point trade, it falls and it stays. Do you see it? Look at this. Look at this. This trade right here is this. It fell and then came back up really fast. You see that? Look at that. Now, if we look at the opposite side of that, look, this is the touch point. Boom. Came up all the way to this side. When it made it back to that zone, came up and stayed. Do you see it? I mean, that's obvious to me. I hope that's obvious to you when you're reading that indicator. That's how you use your indicators. You don't just say, when you're using an indicator like this and it's showing you overbought and oversold, please don't just look at this area and say, oh my God, it's going to go down now. Because if you don't reference your market structure, when you're trying to trade reversals, I promise you, you're going to be mad because you're going to get this. And every time you see it spike down, you're going to think it's going down and it's just going to be going up and you're going to be mad. I promise you, I put it in the video. You can't be mad. I just gave you some big sauce. Don't trade like that. Reference your market structure first. Okay. Now, it is small things that you can use this indicator for as far as making you more comfortable. If you're like, you know what, if I want to take a reversal trade, I have to see a touch point and I have to see my RSI indicator in the oversold section or in the overbought section, then that's a good rule to have if that's how you want to trade. All right. If I want to take a trend trade and I notice that price is giving out at my 14 moving average, I really need to be able to look at my indicator and identify that I'm in a trend. What does that mean? Okay, I see that right here in this area, price is giving out at the 14. I want to take a trade. Oh, look, it has been at the top more than it's been at the bottom. I'll take my 4-minute trade there. I want to take that trade off the 14 moving average. Now, just because you're entering like that, I want to show you something. You see how this movement right here isn't too pretty? That can happen sometime. Look, the movement right here isn't too pretty, but sometimes the movement can be beautiful, right? If you're looking at this area right here, right, the movement right here is much more feasible than the movement over here. So you have to trade that with your own discretion. Your entry rules, if I were you using this indicator, okay, I confirm that I'm in a trend. It doesn't really want to reverse right now. So I just want to see it hit the 14 movement average and close nicely. Let's zoom into the market so we can see it a little bit better. I want to see it hit the 14 moving average and close nicely. So we got this right here. It hits the 14 moving average, tries to come back, closes right here. I already know that's not a high quality trade. I know that my safest entry is up here. If I want to take the entry down here, I need to be very sure that it's going to go. And the only way that you can know that is usually when it's already past it. So like a candle like this. If you want to trade this breakout, you need to let it break out and then come back. When you see it come back, that's when you take the entry. Sometimes you don't get that comeback. Sometimes you really don't. So if you really want to catch this trade, that entry zone is that 14 moving average. And you never know. You just never know when the market wants to go sideways for a little bit. And you never know when it wants to reverse, because this could have very well been a triple 1, 2, 3, and then boom, it could have went up. So you really just have to look. Now, once you get that confirmed, what if you just say, you know what, Ray, I want to catch the reversals. The reversals make the most sense, right? You can let it trend out, let it break that trend line, and then come back to that touch point. That is a very high quality setup. I promise you, right? You can say, I want to take the closes off the middle and the Bollinger Band and trade up to a zone if I see enough space. That's a great setup, right? But that setup is just as risky as actually taking the trend trade too. But if you identify the trend trade and there's certain things that you're looking at, you can anticipate the entry, and you'll start to see that your trend trade entries will start to be right there on that 14 moving average. And when price is struggling to break that 14 moving average, you're going to get excited because typically it'll push off that 14 moving average. And now you got a big snipe. You're 300 points, 400 points in profit with your 4-minute trade. Okay, so I really appreciate you guys for watching this surefire tutorial. I appreciate you for taking the time on me breaking down everything that I see in the market, on me showing you how to set up the indicators, on being able to find the setup, on watching how I mark up my price action. This is something that I can tell you. If you're watching other YouTube videos and you're trying to take what they're teaching you about certain indicators and you're trying to bring that mindset over to the surefire strategy, you're probably not going to have the most success. If you're going to reference another YouTube video for this strategy, I would take it with, you know, with a grain of salt. Now, I'm saying that they can't trade. I'm pretty sure it's a ton of great traders, a ton of people who probably made way more money than me in the market. But this is one thing I know. My channel is based off of congruency, guys. My channel is based off of people being able to trade the same strategy with the same mindset and can get results with the same mindset. I'm not teaching you how to, rely on an indicator. I'm not teaching you how to rely on a scanner, right? Even the things that I have that you can buy from me, it's not coming at trading in a typical way. I want to show you how you can master these charts and make sense of them. After you can understand what you're looking at, you understand the momentum with the Heikin candle. You understand where your zones are. You understand how to use the 14 moving average. You understand what the Bollinger Bands are telling you. The only thing that you're doing is you're walking out discipline, because you're going to have weeks where you can't lose. And then you might have some weeks where you're breaking even, but you should never just have weeks where you just lose dirty. Because once you find the type of setups that you like, you just wait for those setups over and over. And the consistency of that is going to come from you identifying and then entering the same way every time. I promise you that's what it is. So if you got this far in the video and you're going to be using the surefire strategy, I need you to drop in the comment section, Ray, I am headed to go study right now. Thank you so much for the gems. I have put this on YouTube for free, and I promise you, if you take the time to master with the things that I've shown you, watching the video over and over, I promise, I'm gonna say it one more time, I promise that it can pay you in any market that you want to trade. Is it an indice? Is it a stock, right? Or is it high frequency trading? You can take this strategy and tweak the mindset a little bit versus what you're doing, and you can go absolutely nuts in the market, and people will be like, yo, how much did you pay for that course? And you'll say, man, it was some little light-skinned dude on YouTube who gave it to me for free. What a sucker, right? What a sucker. He gave this to me for free. Or are you the sucker because you didn't take it serious? Ooh, that's a gem. I'm going to leave you with it. I appreciate you guys for spending time with me in this video, and I will catch you on the next one.